Hello everyone and welcome to this webinar where we are going to discuss your questions on budget. So first I'll start with some opening comments. By the time, if you have any questions, you can, depending upon the screen you are using, you can keep sending your questions. After my opening remarks, I will try to answer your questions as much as possible in next half an hour. So this was the last full budget by the NDA government before the elections, and many feared that it would be a populist budget, but it continued on the path of a fiscal prudence with the minimal changes in the tax proposal. Government is actually banking on the stability of the tax regime. There is a nudge towards the new tax regime, and it has now gained momentum as many of the reliefs are offered as a part of the new regime. The HNIs, the ultra high net individuals, are actually benefited. The reduction in the peak surcharge rate benefit them, and there are no changes in the capital gain tax, so that also will favor the large HNI individuals. The MLD limits which has been put, that may hurt to the some extent on the sentiment side. The real estate companies of the affordable segment are beneficial because there is no changes there, and benefits have been issued. The ultra high net individuals are impacted there because if you owning a house beyond 10 crore, if you want to put in, there is certain new taxes put in. The capital expenditure side, there is a good trigger. Private sector as well as the government is going to put in large amount of money into new capex, and this will be beneficially. Eventually, it will lead to a lot of jobs and growth. The payment to MSME under Section 43B could be an irritant to large businesses and may have unintended consequences. So we think that this provision may come in for some kind of a revision. The bond street is relieved that there is no increase in the immediate borrowing, and that's why the fiscal deficit numbers are also in check. There is no going to be private crowding out of the private borrowing. The government borrowing is as expected. The stock market reacted positively first, and then due to the margin selling in one particular group of stocks, the markets have started correcting, and that has some impact on the sentiment of the market. Now for markets, we have to look forward to the other triggers, and one of the triggers will be the US Fed meet outcome and also the RBI MPC committee outcome. These are the two important triggers from the monetary point of view, and we also have the corporate quarterly results season going on. So depending upon the how balanced Q3 corporate results comes, we will see how markets react from there. So in a nutshell, if I were to say, there were 7 priorities for this budget. First was obviously the growth and the inclusive development. Then a lot of emphasis were put on the connecting the last mile or the reaching the last mile connectivity, infrastructure development, the green energy, on financial sector, especially the KYC side, unleashing the potential of the country, and obviously focusing on the youth. So these are the 7 priorities for the budget. Now let's try to answer some of the questions which are there. One by one, I'll try to pick some questions which are available. So current government is focusing on the capex for last 3 fiscal announcement. This time the budget increased the capital expenditure. Yes, so budget has actually increased the capital investment by 33% to now 10 lakh crore. So the question is, what are the near-term and long-term impact, and any stock-specific action can be expected? So investment in infrastructure and productivity have a large multiplier impact on the growth. The infrastructure will sustain the economic momentum in the long term. It will lead to some job creation in the short term also, and especially the jobs which are there at the unskilled level at the bottom of the pyramid. There we expect a lot of benefit to flow in. The large capex will obviously help the infrastructure companies, the building material companies, because this capital expenditure will go towards them. The Pradhan Mantri Awas Yojana, the Jal Jeevan Mission, those have also got some 12% to 27% increase in their allocation. So that will help companies which are there into building material like pipe companies and other uh, building material companies. So all in all, it has been a positive budget for them. Why LIC is declining so much? Nita is asking. Jyoti Ladvani is asking why life insurance companies are selling off. So the budget has said that there is an intent to limit the income tax exemption, and the proceeds from the insurance policy beyond 5 lakh rupees will be taxed. So this is basically impact the business done by these insurance companies, especially the high value policies. And the tax exemption, if it is removed, then many people will not buy those insurance policy. That is the fear, and that's why we see that the insurance companies are selling off in the market today. So I hope Neeta and Jyoti, your question is answered. One more question is that the from Neeta, will new tax regime significantly beneficial since one can't revert to the old regime once adopted? So it depends upon the individual. If individual is of the nature where he has a housing loan, or if he is availing other benefits of savings, then it does make sense to stay with the old regime. But if somebody is not saving or utilizing the exemption given under the old income tax scheme, then it is better to opt for the new scheme. The Amit Dudani is asking what will be the impact of budget on the markets for 6 to 12 months. So right now market is going through a technical correction, and overall this budget is likely to benefit the market on the long run. The market, not only from the budget, there are other important factors as I discussed, like what happens into the US economy and Western economies, what kind of inflation is there, how they are tackling that with the help of the higher interest rates. Now we expect that today the Fed meeting about 0.25 or 25 basis point interest rates will be hiked today. How further interest rates are hiked in US, in other western part of the country of the world, and what will be the RBI's response, whether RBI keeps increasing interest rates in India. All these will matter about the markets. And apart from that, the obviously the corporate results which are going on. If company continues to report good earnings, then markets can recover from here. Now let's take some sector specific question. So how do you see the impact of budget on the defense sector? So government has allocated about 4,09,500 crore, about 4 lakh crore into defense. So this is 4,04,09 compared to 3.85 lakh crore into 23. So it is about 6% growth. So this is not very high, but it is still a little bit higher for the requirements of expenditure for basically the revenue expenditure side of Army and Navy and Air Force. So it's a limited scope they have left for the higher capital expenditure, and that's why the excitement which was there before the budget on the defense side is not there, because hardly any money is left for the higher capex after this budget in the defense side. Okay, let me try to take a question. What are the major announcements from the IT sector? So as such, IT is a liberalized sector. There is no direct impact on it, but there are some announcements which can benefit on the fringe side on the IT. There was an announcement that computerization about 63,000 primary agriculture credit societies, about 2,500 crore government is going to put in there. There are some announcements of digital libraries, National Digital Library for Children, that may help. They are going to put in also about 100 labs for uh, creating 5G services labs for engineering solution. So that can also help. Government also has announced one Pradhan Mantri Kushal Vikas Yojana, in which they are going to teach uh, industry 4.0, coding, robotics. These kind of skills are going to be given to young youth, and that will also help increasing the supply side availability for the IT sector. So as such, nothing large is there in the budget for the IT sector, but there are some minor positives which can help the IT sector there. Petroleum sector, Amit is asking again that what does the petroleum sector look considering the focus on green energy? So there are a lot of good developments on the green energy side, and government has allocated some amount. Apart from that, they've also we need to go through the fine print, but what I read is that about 30,000 crore has been allocated to the OMCs for support also. So OMCs can actually get some benefit out of that. Other than that, nothing much has been announced there. Hotel sectors, why hotel stocks? Is there any related impact on favoring the stocks in our sector? So Indian Hotels came out with the results yesterday. The Q3 numbers were much better than the market expectation, and they announced that a lot of higher occupancy and average room rates were also higher, and that led to the rise in the Indian Hotel share price. We also have a buy report on it, and we have a target of 345. From the budget point of view, I think the promotion given to tourism sector, including the state participation and public private participation, about 50 new airports have been announced, regional air connectivity has been announced. So these things will help hotels. We have certain hotels like Indian Hotel, Lemon Tree, Chalet Hotels. All these companies are under our coverage, and there you can look to invest at declines. Government is basically planning to improve the tourism both from the domestic perspective and from the foreigners coming into India. They're going to plan to launch an app that would cover a lot of aspects like virtual connectivity, physical connectivity, tourist guides, and also high food streets have been across India. 50 destinations have been announced with higher standard of cleanliness for those food streets. So all these things will help the tourism sector in the long run. Okay, railway sector is one more question is there. What would be the impact of railway capital outlay? So railway outlay has been marginally increased, and this is one of the highest allocation towards railway. So railway companies, especially the wagon manufacturing companies, can also get benefited out of it. There was on auto side, there was a announcement on vehicle scrapping policy. The policy was announced that in the previous budget, government had allocated some funds that the old vehicles of the central government will be scrapped. Now they are planning to extend these schemes to states also, and that is basically a positive for CV manufacturers. Banking sector question. So what will be the impact of banking on the budget? So government has specifically increased the capital expenditure on the budget side about 33% to 10 lakh crore. So this is a big positive because greater emphasis on capital expenditure means the companies will look for higher loans, especially the railways and on the infrastructure side. That means there will be higher opportunity for the credit growth by the companies, by the banks, and government has also increase the allocation towards certain MSME schemes. Apart from that, the government has also relaxed some income tax. So the high-end salary class plus the people who are earning below 7 lakhs, they can also look to increase their consumption, and that group may also look for opportunity to take more loans, and this is actually going to benefit the banking sector as a whole. So overall, it is a positive for banking sector. What will be the increase in duty on cigarettes? So especially cigarette companies, the national calamity contingent duty, the NCCD on cigarette has been revised upward by 16%. So about 2% impact on the cost of the price of the cigarettes can go up. So this is not much. It is as per the market expectation, even in fact lower than the street expectation of increase in taxes after 3 years, because 3 years there was not any increase in the duties on the cigarettes. So there is a relief rally which is going to come into cigarette stocks. On gems and jewelry, outlook on gems and jewelry. So the prices of gems and jewelry will go up because the custom duty on several key items like silver, gold, platinum and imitation jewelry, they have been effectively introduced, and that is from the 2nd of February. So from tomorrow only, the duty on these precious metal items is coming in, and the duty has been increased from silver from 7.5 to 15%. So imitation jewelry, silver jewelry, all these will have a higher taxation, and because of that the prices can go up, and this is a negative for gems and jewelry. So individually, I think today there could be a lot of rush for at jewelers to buy because the duties are increasing from tomorrow, but overall this is a negative for gems and jewelry sector. Let's try to take one more question from Anmol. Electronic component industry, something like Nixon. So the question is on how government has reduced the duties and how will it beneficial for electronics manufacturer companies. So basically, budget has cut the custom duty on mobile components like cameras, also on batteries offered for the lithium ion batteries. So this is basically will help reduce the prices, and this will make TVs little cheaper. The electronic manufacturing industry can get a little bit of benefit, but the imports compared to the local manufacturing will become little cheaper, and that may have a negative impact, marginal negative impact on the local manufacturers. Changes in GST, Kiran is asking. So GST Council is the actually the appropriate body which does the changes on the indirect taxes. The indirect taxes are not actually covered under the budget. So there are no expectations of big changes into GST from this budget, and nothing has been announced there. So we don't expect anything to come out there. So which two sectors are likely to be beneficial of the most? I think the capital expenditure side, the companies which are into capital goods, heavy engineering, road, railway infrastructure, they are the one who are likely to be the major beneficiary. And the second is the consumption side, as at the lower end below 7 lakh and below and very ultra high net individuals, these two segment of the consumption side have got some tax benefits. So that is likely to result into at the very low end of the consumption and at the very high end of the consumption. These two are likely to benefit, and that may have a positive impact on the markets, on those sectors. I think I've answered all the questions. Yeah, thank you, Kiran. Thank you, Amit, Abhijit, Amit, Jyoti, Neeta, for asking these questions. We have almost run out of the time. So if you have any question, you can also write to us. We are going to come out with a pre post budget note, and we'll also go through the budget document today. Our team of experts will go through, and if we find any opportunity, we may look to come out with the post budget picks. But otherwise, overall sentiment of the market is little negative because of the problems with one particular group, as you know, and that's why there is a negative impact on the market. So it is better to conserve capital for now. All right, I think this brings us to the end of this webinar. I thank you one and all for joining, and see you at 5 o'clock, where we are going to, our experts are going to talk about the budget in more detail. So thank you, and see you at 5 o'clock.